Welcome back, and starting that new year with a perfect portfolio is something that all investors think about, but the crude oil prices clearly have moved in such ways that it has impacted all portfolios and asset classes, and so has been the case with US dollar index, which has led to newer highs impacting markets. As of now, of course, some bit of a decline coming in for there, but crude oil is what we will stick to right now. And Ajay, what's your sense for the next 6 months? Where do you see the international markets ranging within?
Yeah, surely, because in 2022 and 2008, I was just updating that whatever the rally we have seen in 2008, similar kind of momentum we have seen in 2022 also, where Brent has almost tested $139 and came back. But looking to the current factors like winters are on about to start, and generally we see
Yeah.
demand improves. Secondly, US is trying to continue suppress the prices of energy, but we feel it has been totally failed because right now also Brent is very well above $90. OPEC has clearly told from November onwards production cut would be there. So I think with the rise in economy or improvement in economy, we need a oil, and if we need oil, definitely oil would not be a cheaper. So I am expecting a bounce towards, let's say, around 105, 106 for Brent in near term, which will
Okay.
definitely impact on MCA crude, which can go up to 8800 because rupee is also going to be slightly more weaker. So all these combination
Okay.
make crude a perfect pick.
Mr. Ramaswamy, what's your sense? Are you also bullish on crude and you think $100 could be breaching anytime soon?
Yeah, it should be breaching that. Basically, geopolitical on oil and gas is basically on the demand and supply imbalances. You have around 28.7 million barrel per day. The entire dependence is on the OPEC plus production. And now there is a threatening news about cutting the production by them. So that is taking the short-term news factor, which is going to actually be the turning point for the oil market. And besides that, from the G7 nations, the deadline which was given to the Russian price cap was around December 5th. And you have the EU Russian crude, which is being banned. And all these tightening of the crude supply is going to be the trigger for the short term. And probably it should, then the price factor, it should hover at around close to around $100. We are expecting right from now a WTI, which I mean $84, which is currently hovering. So it could range based on these political factors. It could range between the $75 to $95. But yes, we could also touch upon this $100 in the short term.
Okay, so bullish views on crude oil prices. Actually, there was a Goldman Sachs report as well suggesting that in next 3 months, 6 months and 12 months, crude is something, or the energy pack is something that would give you the best of returns if you have that in your portfolio. What about natural gas, Pritam? Would you take it in your portfolio well?
I'm looking at a $10 kind of a rate by the end of the year, next year. I'm very bullish on natural gas, mind you, because all of us have conveniently sidetracked all the factors, forgetting the fact that Europe is actually struggling and rather gasping with the lack of natural gas. My sense is that natural gas, given the fact that we are now sitting with winters, is going to only intensify the price rise from here, this perspective. To get substitute of natural gas is not going to be easy. Europe had moved to clean energy methods, so your diesel generated power plants are passe today. So today, if you ask me, natural gas is not going to be replaced very easily, and the lack of supply from Russia is going to create a tight supply situation across the globe. Let us not forget, China has been sitting on the fence line with the industrial productions not being so high. And come China production coming back to normalcy, you'll see an increased demand in natural gas. And that's going to further, ignite the requirement for natural gas in the global markets. And that's why I'm very, very bullish for natural gas in the long term.
All right. I hope your throat gets better as we move ahead. All right. Anuj, until now we've been talking about everything that you should buy in your portfolio. Is there something that you want to sell and move on in your portfolio?
Manisha ji, I think this year we have seen a huge momentum in commodity market. If we check particular energy prices, earlier a few months back, natural gas was were trading around $10, and right now it's trading around $5. So already we have seen a huge momentum. So if we talk about the natural gas prices, or even if we talk about the any commodity prices, which are now on a very promising level, where we are not recommending to sell, because in international market, we are saying that domestic market in gold are saying it's trading around 51,000, but in international market it's trading around $16-18. So that is not a level to sell. But definitely, I think prices are very on a very lower side, and where we have seen a huge demand. So Right now, I'm not, saying any sell call in the portfolio
Any
because
of those
market,
commodities? Okay.
yes. So I'm very optimistic for commodities for the next year. So I'm not giving any
All right.
sell call in this commodity segment.
Okay. So even as you are buying, Mr. Ramaswamy, I mean, I see your faces because you all are very long in commodities.
I would like to add a point here. It's all depending on the major trigger of what's going to happen on China front and Russia.
Right.
So these are very, very uncertain for us to actually predict beyond a 6 months horizon. So these two factors are going to really play.
Oh yes, Russia-Ukraine war and China as a factor are going to be very important. So Mr. Ramaswamy, if you were going to make a portfolio which only consisted of commodities, how would you put your allocations on? How much of weightage would you give to energy, industrial metals, precious metals and agriculture in that sense?
I would go in for around 25% towards the bullion pack, silver and gold put together. And a 25% for a short-term 3 months horizon, I would go long, preferably in crude, and copper the rest of around 25% and remain 25% liquid or cash.
Okay, let's talk about agriculture commodities then, because they have made a lot of money in this year as well. We've seen all-time highs in cotton. We've seen palm do everything that it hasn't done ever in its life. Ajay, how are you looking at agriculture commodities? And I know a long-term view is slightly difficult here, but for the next 3 or 6 months, which ones would you bet on?
Yeah, definitely for next 6 months, I think the spices will definitely go further here. Still, from last Diwali till now, we have seen dhania prices has went up to around 40% gain already been seen. Jeera prices went around 55%. But still, we are expecting the gist is been still there in spice market because already we know our carryover stock is slightly poor. Production last year was slightly little bit lower. Export demands are picking up because of rupee weakness. Pipelines are totally empty. Post-COVID and post-war, demand has been improving. So I am very much bullish for Jeera and Dhania. Also, this year sowing will be most important because particularly for Jeera, we have too many competitions like in case of wheat, mustard, soft or isab are been very competitive pricing right now. So overall, I think for next 6 months in agri market, I think opportunity would be in Jeera and Dhania, where Jeera can easily test around 30,000 before new crop arrives. That means in the month of Feb. Similar kind of fundamentals have been seen in Dhania, where we can see easily 17,000 to be tested by Feb mid.
All right. I have one quick last question, and this one is to you, Anuj. We do understand that there's a lot of buying opportunities, including commodities within your portfolio. But do you think when it comes to agriculture commodities or many of the other commodities as well, do people actually include them in their portfolio, or is it only the stakeholders which end up buying them or including them in their trade?
I think Manisha ji, agri commodities are a very strong commodity to take in the portfolio because it's if we talk about the equity market, there is a 95% of stock which are totally depend on the agriculture segment. So I think if you are not trading in equity market, you should trade in the agriculture commodity because this provide a momentum to the equity stocks. So I think you are asking me the selling call. So I am giving a sell call in the agriculture commodity because in this year we have seen a huge momentum in edible oil. So I am a little bit hawkish in edible oil segment. I am expecting that soya bean and refined soya and crude palm oil may go down this year or next couple of months. So I am a little bit pessimistic on the edible oil side segment.
So finally, some sell call actually coming in, whether it's in case of edible oil itself, while we have seen prices come off by 35 to 45% in that sector, but there could be some more decline coming in. That, of course, is because of the high availability that we've seen in that sector. Gentlemen, thank you so much for joining us today and making that perfect portfolio when it comes to commodities as a market. And with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.